I want to talk to you about LLC taxes, and this is a complete guide to LLC taxes this year. So you have a clear idea about LLC taxes if you are going to, if you have an LLC right now, or if you're thinking about having an LLC this year or next year. So here's an overview I want you to pay attention to. So when we talk about LLC taxes overall, you need to understand, first of all, the LLCs are actually formed at the state level. So it doesn't matter the kind of state you're in. You basically are going to actually file, you have to organize your LLC based on the states you're in. So if you're in Texas, if you're in New York, if you're in Alaska, if you're in Hawaii, if you are in California, you have to follow the law there first in terms of organization. Okay. And LLC's tax classification depends on its members, the business owners. So the IRS assigns a default tax structure based on the number of members. So from there, members can elect to change their tax classification. So the IRS assigns two default tax designations. So sole proprietorships basically are treated as a single member LLC, and general partnership are treated as a multi-member LLC. Let me explain. If you are a single member LLC, in the eyes of the IRS, you are seen as a disregarded entity. In other words, you file taxes as if you are a sole proprietorship. And if you have a multi-member LLC, in the eyes of the IRS, you are treated as a partnership. In that case, you file Form 1065. So this is really important. Now, how is an LLC taxed? Well, it really depends on how the business chooses to be taxed. The flexibility of the LLC structure means that there are 4 separate tax classifications that your LLC could fall under for federal income tax purposes. I want to repeat, federal income tax purposes, because you also have to consider state taxation, but that state taxation model depends on the states you're in. So if an LLC is a single member LLC, in other words, one shareholder, and hasn't opted to file as a corporation, it will file its taxes exactly as a sole proprietorship would. And if the LLC is a multi-member LLC, in other words, multiple shareholders, and hasn't opted to file as a corporation, it will file its taxes exactly like a partnership, Form 1065. If it has opted to file its taxes as a C corporation by submitting IRS Form 8832, then it will file its taxes as a C corporation. And if it has opted to file its taxes as an S corporation by submitting IRS Form 2553, then it will file its taxes like an S corporation. And in this case, it will be Form 1120S. For a C corporation, it is Form 1120. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So let's talk about filing taxes as a single member LLC. So when you file taxes as a single member LLC, what happens here is that you are actually, you are filing Form 1040. And then whatever profits and losses you have derived from the business during the year, you actually put that on your Schedule C. So pretty straightforward. Okay. So when we talk about Schedule C here, this will help you determine your taxable income. And to fill that out, you need an income statement, as well as financial records and receipts for all the deductions you plan on making. You also have to report and make Social Security and Medicare tax payments. For example, your self-employment taxes using Schedule SE. That's filing taxes as a single member LLC. Now, what about filing taxes as a multi-member LLC? Well, if you are part of an LLC with multiple members, you use the informational return Form 1065 to report the business income or loss to the IRS. Now, informational return means what? It means that you're not paying taxes at the company level. You're just submitting like an FYI return to the IRS to let the IRS know what's really happening in your firm from a profitability and also a loss perspective. An LLC prepares a Schedule K1 for each of its members, and Schedule K1s must be completed as part of Form 1065, but they are also used by members to report their share of the LLC's income and deductions on their personal tax returns. And LLCs are considered pass-through or disregarded entities, meaning their profits and losses pass through directly to the business owners. And owners of multi-member LLCs report their business's profits and losses on Schedule E and report self-employment taxes using Schedule E. So this is kind of important. Now, to actually file Form 1065, you will need all of your LLC's important year-end financial statements, including a P&L, so a profit and loss statements that shows net income and revenues, a list of the partnership's deductible business expenses, and a balance sheet for the beginning and the end of the year. And an LLC completes each member's Schedule K1 as part of Form 1065, which basically identifies each partner's share of the profit or losses over the course of the reporting period. Okay, and this reporting period will be, can be 1 year or 9 months, depending upon when the LLC was formed. And each partner's Schedule K1 is necessary as part of their personal tax return. What about filing taxes as a C corporation? Well, if the members of the LLC believe it can lower its tax bill by being taxed as a corporation, they can file Form 8832 with the IRS and opt to be taxed as a C corporation. And so changing your tax status to a C corporation means the IRS treats your business as a separate taxpayer. So instead of letting the LLC's corporate income and expenses flow through to their personal tax returns, the LLC owners are taxed separately from the company, and the LLC files its own separate corporate return. So this is Form 1120. And filing taxes as an S corporation, they will mean that you have to file Form 1120S, okay? And this is one of those things where you have to file Form 2553 to elect to be taxed as an S corporation. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about LLC taxes. This is a complete guide to LLC taxation. Now let's talk about when we talk about LLC and taxation, is an LLC really better for taxes? It really depends upon your situation. One thing I want to say here is that switching your business structure to an LLC may seem like a surefire way to reduce your taxes, but LLCs are sometimes subject to additional annual fees and state franchise taxes. It's actually the flexibility of the LLC designation that benefits most small businesses. And everything, as I've said before, you got to look at LLCs at the state level. So basically, based on the state you're in, the LLC could be a little more flexible or not. And one thing I want to say here is that an LLC could cut your tax bill if you are currently subject to double taxation, if you're paying lots of cash in self-employment tax, if you need liability protection, and if you are focused on growth. Let me break it down for you. What do I mean by if you're currently subject to double taxation? Well, LLCs that opt to be treated as pass-through entities avoid double taxation. So instead of getting taxed when they earn income and distribute profits to shareholders, LLCs pass their gains or losses onto their owners and only tax once, which can result in a lower tax bill. So if your company is making a profit and you want to take some of that money out of the company, it's generally cheaper to do so as a pass-through entity than a C Corp. So it's one of those things where you got to really look at the flexibility, not only from a tax perspective, but also from an operational perspective and from a liquidity management perspective to see what really works for you. And if you pay lots in self-employment tax, an LLC could actually be great for you, fiscally speaking. So unlike owners of sole proprietorships and partnerships, S corporation owners only pay self-employment taxes on their wages instead of their entire share of the company's profits. All other income goes to shareholders in the form of distributions that are not subject to self-employment tax. An LLC could actually cut your tax bill if you need liability protection. So it's one of those things where, the liability protection is actually in the name already. Limited liability company. Okay, so like C corporation and S corporation, LLCs give their owners limited liability. This means that if the LLC ever goes under or gets sued, your personal assets are off limits, which is really important. If your LLC is using an owner's personal bank account, though, their personal funds can still be seized. You can make sure your personal assets are safe by opening a business bank account. Let me give you the approach you need to follow here. When you think about LLC taxes, it's important to understand that there are other taxes that LLCs have to pay. What are those? Well, like all business structures, LLCs they owe more than federal income taxes. So additionally, LLCs may have to pay multiple taxes to their states and federal government, depending upon their location and tax classification. So the main ones include, you have self-employment tax, you have income tax, personal and corporate. You have payroll taxes. You have property tax. You have social security tax. You have excise tax, and you have sales tax. And let's dig a little deeper here. So when we talk about self-employment taxes, if an LLC files taxes as a sole proprietorship or partnership, The IRS considers its members self-employed for federal tax purposes. So when you work for an employer, your employer pays half of your Social Security and Medicare taxes, right? And you pay the other half. But when you're self-employed, you must pay the full amount yourself. So on your annual tax return, you can actually deduct half of this tax return from your income, which slightly offset the impact of the self-employment tax. But then you really need to file a Schedule SC Form 1040 for self-employment tax with your tax return. You also have estimated quarterly taxes. So here, self-employed individuals need to make estimated payments on their self-employment and their personal income tax every quarter. So failure to file quarterly taxes can lead to penalties and interest, okay? So LLC members can make estimated tax payments on Form 1040S, 1040ES. You also have to think about state income taxes. So this is what I said before. An LLC is a state affair first, okay? Now, state can set their own tax rate on personal and corporate income. So making accurate payments on state taxes is just as important as the federal filings. And LLCs and their members may need to file income and franchise taxes in every state in which they do business. And state tax forms and due dates vary from state to state. So you really need to really check with your state tax authorities to see what really applies in your specific location. So this state income taxes come in addition to your LLC's annual renewal fee. So similar to our income taxes, every state sets a unique fee. So due dates also vary by state here. So you want to consult with your registered agent or a business advisor for information on renewal fees and due dates. So in addition to your LLC's annual renewal fee, it's important to note that some states' income taxes may also apply. So this state's income taxes are actually separate from the annual renewal fee and are specific to each state. So it's really, really important. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about LLC taxes. This is an in-depth review of the LLC taxation model. So let me give you a winner here. So what are the best practices for filing LLC taxes? And it's really important to understand that LLC filing takes expertise and patience. And so to see the best tax results, just follow this best practices. Let me give you a few hacks here first. So you want to get organized as soon as possible. I mean, it doesn't matter where the state you're in. A lot of folks believe that, if I organize in Delaware, things will be a little easier there. No, you got to be organized in every state. So every LLC tax classification needs to actually file unique forms on different tax due dates. So you want to study IRS the guidelines in advance to prevent incorrect filings or missed deadlines in tax season. That's what you do not want to actually be behind at all. Okay. And it's one of those things where you have to really start a little early. So should you file your LLC and personal tax separately? Yes. You will need to file separate tax returns for your LLC and personal taxes. So if you operate your LLC as a proprietorship, partnership, or S corporation, the IRS treats your LLC as a disregarded entity. This means that your LLC's income is reported on your personal tax return. However, if your LLC is a partnership or S corporation, your share of the profits will also be subject to separate income tax filings as part of the partnership or S corporation return. It's really important to consult with a tax professional to ensure accurate filing of both your LLC and personal tax returns. And so would you receive actually your own, would your LLC receive its own tax return? Yes. Only LLCs structured as C corporations receive a separate tax return. Otherwise, LLC profits show up on a personal tax return. Even if you file Form 1065, you still are going to report the data on your Form 1040. You also need to deduct LLC startup cost. So the IRS offers special deductions to LLCs during their first few years of operation. So you stand a better chance of seeing your business grow by capitalizing on these opportunities. You also need to find classification-specific tax breaks. So every LLC tax classification can take advantage of unique deductions, and you want to partner with an attorney or tax expert to find all the deductions applying to your business structure. And unlike startup deductions, this savings will apply as long as your LLC maintains its structure. Let me give you a bonus here. So when we talk about LLC taxes, it's really important to understand that LLC taxes are so important from several point of view. It's one of those things where taxes are paid at the LLC taxes are paid at the federal, state, and local levels, and there is a wide range of potential tax categories that LLCs might be responsible for. Right? Examples, as I said earlier, include payroll taxes, sales tax, self-employment tax, and more. Now, failure to report, file, and pay the appropriate taxes to the right agency can land your LLC in hot water, and you do not want to have that. And you could be hit with the fines, penalties, and run into other issues for non-compliance. For example, the states might not issue your LLC a certificate of good standing if your LLC taxes are not in order. And this could actually prevent you from obtaining a loan, for instance, entering a contract with a potential partner, securing financing from an outside investor, or restrict you from conducting dozens of other business-related tasks. So the unique part about LLC taxation is that, unlike other business entities, LLCs have, as I've said before, flexibility with how they're taxed, right? In simpler terms, you have several options to consider. So it's one of those things where, going back to what I told you earlier, you got to think about whether you want to elect to be taxed as a sole proprietorship, as a partnership, as an S corporation, or a C corporation, depending upon the fiscal configuration that you want to set up. And each scenario has pros and cons, and the best option truly depends on the LLC in question. So whether you're running, let's say, a single member LLC, multi-member LLC, what state or states you're operating in, and whether or not you have employees, basically those are all examples of factors that will play a role in the best strategy for your LLC. At the end of the day, having an LLC and the strategy you want to have for tax purposes is an ongoing strategy, right? It's really important to understand that strategy will change depending upon the state you're in, and also depending upon the operational journey, the profitability journey that your company is getting into. In other words, if you're growing fast and you are trying to draw more investors into the company, at some point you might want to actually switch to a C corporation as opposed to having an LLC in terms of the operational structure itself, but also the legal structure. So those are elements that you need to really pay attention to in terms of how you grow your company and how you actually operate things from the get-go. Let me give you a few pro tips here, and those tips will help you actually navigate LLC taxes a lot more easily. It's important to really understand that you want to take advantage of accounting software. Okay, the IRS and other tax agencies don't make things easy when it comes to calculating taxes. So trying to figure out exactly how much you owe and when you owe it can actually feel like you're about to perform brain surgery. So even if you manage to get everything right, it will likely take you a ton of time if you're doing this manually, which you do not want to do. So your time can be actually better spent working on other aspects of your business. But accounting software really simplifies things for LLCs. So tools like QuickBooks, Wave, you have also Gusto. Those tools help you prepare for tax time to maximize the deductions. And so while QuickBooks would not necessarily tell you which taxation method works best for your LLC, it keeps everything organized so you and your accountant can confidently make this decision. You can also use any tool that you have to track expenses, automatically sort expenses into the right category, and share reports with your accountant, which you need to have anyway. And so this is really great. And also elect for C corporation taxation. So getting taxed as a corporation can be beneficial to many different types of LLCs. With a C corporation election, it can simplify things for you as well. So for income tax purposes, a C corporation is considered a separate entity from its owners. In this scenario, profits and losses from the LLC are not passed through to individual tax returns of each owner. Instead, the LLC will pay income taxes on its net profit for the year at the corporate tax rate. You also use S corporation tax status to save on self-employment taxes. So the self-employment tax is a significant burden to many LLC owners nationwide. So the self-employment tax rate is 15.3%, comprised of two parts. You have 12.4% from Social Security and 2.9% from Medicare. So regular employees pay Social Security and Medicare taxes, but they pay these taxes at the lower rate as their employer matches contributions. Self-employed individuals are responsible for paying the full 15.3% on their own. So when you actually switch to S corporation, you could actually save there. So the bottom line here is that you also have long-term strategies for LLC taxes. Invest in your own company. You want to prepare for a quarterly estimated taxes. You also want to start with a default LLC tax structure before making changes. So the bottom line here is that you really need to see how your company progresses and basically make adjustments as things actually change. Thank you so much for your attention. Really appreciate it. In today's conversation, I just gave you an in-depth look into LLC taxation this year. And let's do a quick recap here. So I actually give you the overview, the approach, the winner, the bonus, and the pro tips. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.